Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. This is the 4-hour chart of gold USD in front of us, and right now, gold is standing at 1649. This is the current market price. And since yesterday, we can see that there is no proper direction on the market. Right now we can see market is silent. We do not have any clear-cut direction. So trend lovers, you need to wait for some time. And day traders, you may get some opportunity, but especially swing traders and positional traders, okay, you may need to wait for 1 or 2 more days unless we get any proper direction on the market. If we look at the overall chart, then yes, the overall chart may look bearish, and right now market has formed a descending triangle pattern here. In descending triangle pattern, we usually have a support, and whenever market goes up, it fails to break the previous high. You can see whenever the market has gone up, it is unable to cross the previous high. It signifies that selling pressure is increasing in the market. Okay, as a result, in descending triangle pattern, we usually see market going down. Means market breaks the support and market falls further. In this condition, we have support around 1640 to 1641. So if market comes down to this particular level here, okay, observe the market first. If the market remains like this, it means that right now, as we can see, that there is not much volatility in the market. So if the market remains like this, then you can expect the market to bounce from 1640 to 41. If not trend reversal, at least you can expect a profit of 30 to 40 pips. 35-40 pips is decent enough. So if market bounces from here, if you see the market is slow, market is trying to take support, price rejection from below, you can go for the buy position. But in case if you see that there is a sudden selling pressure in the market has formed a sudden red candle, it means that sellers are back in the game again, and you should avoid any buy position, because after all, the market has already given us the indication that there's a high chance of market going down, breaking the support and going down. In this case, you can take a sell position below 1639. If you see that selling pressure is too high, then you can go for a sell position below 1639. So 1640 to 41 will be important level for us. Okay, but right now market is standing 1649. You can see just above the 1640 level, I have drawn another level around 1646. 1646 is a very high risk buy level. If market comes and bounces, you can expect a quick profit of 20-30 pips, not more than that. But beginners, new traders, try to avoid levels like this, because personally I will also not trade on 1646-45 level. I prefer to trade on levels that are good enough. See, this is the 1-hour chart right now. In the 1-hour chart, you can see that we have some price rejection around 1646 level. So yes, during the day there can be some trading opportunity around 1646-45 level. Day traders, if you see market bouncing from here, you can go for a quick profit, but keep in mind this is very risky. Personally, I will avoid, and I'll also suggest beginners, new traders to avoid trading levels like this. Okay, you should only wait for the right levels. Before I proceed, I would like to take you to the chart of DXY. This is the 4-hour chart of DXY, and as we all know, DXY is the overall DXY is an uptrend. There is no doubt. We all know that DXY is an uptrend for the last couple of months. Okay, DXY is extremely bullish. But my dear friends, I would like to tell one thing. If we look at this particular portion of the chart, okay, forget about the overall uptrend of DXY, forget about the bullishness of DXY or US dollar. Just concentrate on this particular portion of the chart here. Do we see an uptrend market? Do we see the crazy bullish power in the market? Obviously, the answer is no. So yes, I think that there may be some correction on the chart of DXY, and not a small correction. There may be some big time correction on the chart of DXY. Okay, because if we look at the chart carefully, then obviously in this situation the market does not seem very bullish. Let me show you. Sorry if you think that the video is too long. Okay, I just want to show you the detailed picture. See, overall the market is in uptrend. Market is forming lower highs. Sorry, higher lows. I always get confused with these terms. Market is forming higher lows and market is going up. So as long as market is continuing this trend here, market is respecting this uptrend here, the trend line, okay, market will be in uptrend. But I was just telling you about this particular portion of the market here. Okay, we can also see that market is also forming lower highs here. It means whenever market is going up, market is unable to cross the previous highs, which also shows that slowly there are sellers joining the market. Okay, there are sellers joining the market, or the buyers are losing the strength, or buyers are losing their interest. So as a result, I think that there may be a correction coming soon on the chart of DXY. So you must be very ready. Okay, I don't know when the correction will come, but there may be a correction by tomorrow, but not by tomorrow, by next week or by next month. Okay, we cannot time it. Okay, but yes, there may be some correction. And if you look at the chart of bond, then you can see that the US government bond is right now standing at a very crucial level right now. So if it starts going up, if it breaks the present resistance here, then obviously we will see good downside on the chart of gold. So let's discuss the other levels on the chart of gold. So in case the market goes up from here, let's say during the European session or US session, if we see an upside on the chart of gold, so if market goes up from this level here, and if we see that market breaks the trend line here, because the trend line is the first resistance. Okay, the trend line is acting as the first resistance right now. So if market breaks the trend line, then the first resistance will come around 1660 to 1661 again. This is the first resistance here. Then we have got 1666 to 67. Then the third resistance around 1672 to 74. So 1660 to 1601 is the first resistance, R1. 1666, 1666 to 67 is the R2. Please write down the numbers. Okay, if you are confused, then 1672 to 74 is the R3, resistance 3. So in case market breaks the trend line, listen to me carefully. In case market breaks the trend line and starts going up, then observe the market around these levels first. No level is permanent in the market. In case market starts going up from here, if you see that market is going up slowly, in that case observe the market around 166061. If you see the market is facing selling pressure, market is showing price rejection from above, you can go for a sell. But in case during the European session or US session, if you see market forming a big green candle, then obviously you will not take a sell position. You are not a fool. Okay, so you need to observe the market at each and every level. This is the main difference between a trader and a gambler. A trader only trades when the opportunity is right at the right levels. So if market reverses from 166061, you can go for a sell. If market breaks it, leave it. Observe the market at 1666.67. If you see that resistance 2, second resistance is working, then you can go for a sell. If it breaks it, then also you can leave it. Okay, by that only you need to trade. Okay, and please follow proper risk management. This is my analysis, I can be wrong as well. No trader is 100% accurate, so please be careful and do not gamble with your hard-earned money. Okay, please trade wisely, please trade properly, and do not gamble. Bye bye, take care.